Hey, and welcome back to Financial Reactions. This video series, we're doing the $10,000 portfolio. So let's take a look at it. As you can see, we are profitable overall on the entire portfolio. But this video is for the weeklies, so let's get into the weeklies. Starts with Rex Shares. Rex Shares is up overall, so the entire Rex Shares portfolio is up, and we had a good day Friday. Before I show you this great news, could you do me a huge favor and hit the like button? And if you don't mind, go ahead and subscribe too so you don't miss any more videos. This is what happens when you have a maybe end to the war. You had this huge uptick this week. So let's hope that lasts because we can get over that and get back to normal. The big winner is Rex Shares, and there we go. Scrolled in a little too far. Alrighty, so CWII, this one has really been good. Look at that. It's went from 1073 in the beginning of March to 1520 is the current price, and this is actually the average price. So we have 977.69 shares. It's up 4,371.21 overall, which is 41% in a month and a half. So that's probably not going to happen over the long term because of that stock price is not going to keep growing like that. But this is one of those that it pays every week. The yield is 50. The current yield is 35. As you can see, the annual dividend is going to be $5.40. And this is on the entire portfolio. It's going to be $5,282 a year on just that one. What this one pays is, as you can see, it pays 10 cents a week, so it doesn't fluctuate. So this one is that one that you exactly know what you're getting. What are some of the other ones? MSII, share growth, HOII, share growth, and share growth, and this one did not. So it paid only 5 cents in dividend, and it has not kept up on price and 5 cents. These look like they're just kind of steady payers. They're low, but they pay steady. And we have these four that are in the negatives. So in this group, you're looking at these three. And like this one jumped huge in stock price, so I'm really going to have to keep an eye on that to see if that stock price holds. Because if it holds and continues to grow even slowly, that would be a good one to look at for long term. Roundhill. Overall, we had the big jump at the end. There's a few more in this one, and almost all but the last four are in the green. Who's our big winner? ARMW paid a 44-cent dividend this week. Look at that. Its our yield on cost is 89 and current yield is 62. Annual dividend is $23 on a $36 stock. So 44. Go way down here. 44 is on the high side. As you can see, we've had a few good weeks, but look at that. Before that, it was down to 16. And it looks like around 30 if you were going to ballpark a average. So that's the Roundhill. Ugh. Of course, the total. Look at that total portfolio on that one. Oh, there's why. It went from 25.98 average. It's up to 36.89. So looks like a lot of our gains are in the first couple, and then these are in the $1,000 range. But don't forget, this is a short-term gain, so these things really seem to do well in an up market. But don't forget, the opposite will be true if the market crashes. So just keep that in mind. 33 cents. How's 33 cents look historically? Really wish they would flip these and have the older stuff at the top, but 33 is on the high side, and you see it had a low of 8, 20, 28, 30. So this last week we had some huge gains, and of course the weeklies are going to pay a little better because everything else is up. Yeildmax Group 1, how was that one looking? Portfolio is up almost 5,000 overall. 1,500 of that was Friday. Here's your April climb, but don't forget we started back here at the beginning of March. So we are almost even. So we're just a little above when you look at it that way. But these are all, you started with $10,000, rounded down to the next even number of shares, so usually just a hair under 10,000. So all of these, if you had put 10,000 in, you would have more than you started with. And why is there red on this one? Because like I said, this includes averages, so every week it buys more shares. So the money you reinvest is calculated into your profit or loss on here, but you started with $10,000, so you are above what you initially put in. You just have the income of dividends that is offset. So the best one on this group is Chippy, and it's a lot of share price. Okay, this one has good. It's up, and it's only up a couple of bucks on share. So let's see if it's been paying 24 cents. Let's see how the dividends have been paying. And okay, this one steady. Look at that. All in the 20s. I'm okay with that. You see it goes up and down a little, but this one's not super volatile. Crypto industry. The crypto market is down right now, so since we started this evidently at a good time, that's why we're catching up a little bit of recovery in the crypto market. If you guys follow Bitcoin, you know it's went from 120 down to 60, and now it's, last I heard, was in the 70s. I don't follow Bitcoin closely, sorry. There's that. Chippy is semiconductors. We got AI, Dorsey Wright hybrid. Some of these are just, they're also in indexes. So, but that is a good portfolio. Look at all that green. Gotta love that. So what's Yeildmax Group 2 looking like? Look at that. It's still in the tank. Even though we had a $2,000 recovery, it's still way down, as you can see. Look at that. Blah. Some of these are... Look at one of them is huge, 16,000, and that's HIYY. Look at, and that is almost all cost. You're at 1188 average, and it's up to 1764. 24 cents, and historically, yeah, 24 is okay. You can see it's gets in the high in the 30s, the lows in the teens, upper teens, so 24 is kind of right in line. AMD, let's see, the annual 70 cents. So that puts the yield at 101 and 79. So that one pays decent dividends. Let's see the history of it. Holdings, dividends. Yes, I'm on the right tab. And we seem to have a little internet issues, of course, while I'm trying to record a video. But let's see. We had a 70 cent declared annual dividend for the portfolio for all the shares you own is $11,000 a year. So if you started investing $10,000 and you're going to get an $11,000 a year dividend, that might be okay. Let's see. Like I said, we did 70 this week. And that is huge, and that's why the numbers are skewed. 70 is much higher. You can get 70, 50, and then a bunch of 30s. So I would say this, you had a bounce back here too. But somewhere in the mid-30s would probably be 30 to 40 would be a more normal return. But these weeklies jump dramatically because of the overall market. And even though this one has lost a few cents on Friday, overall, it's still pretty good. What are some of the other winners? Morrow, looking good. Yield on cost. Wow, that's a high yield on cost. Let's see why that one's so high. On 11 cent, something's different. Something happened. What did they do? 11 cents. That looks normal. I guess it's just because, 11 cents on a $6 share. That's why. I should have looked at that first. As you can see, the dividend, the estimated dividend over the next year is $13.38. So that's more than twice your actual share price. So if you're looking for an inexpensive one to grab and get a few shares of, I would look at that one. But you need to first look at its price history, because I'm having a feeling that probably hurt itself over time. It's kept falling. Like Misty, it went through a 10-to-1 or 5-to-1 reverse split last fall. So that's the downside. A lot of these did do a reverse split. And this dividend tracker will not pick those up, and I'm not sure if you track dividends in yours. Unless you're linked to an actual portfolio, it might not pick it up, so that's something to keep in mind if you're tracking dividends. But this whole group looks good, so if you went into the Yeildmax Group 2 on their webpage, you can read more about those. Defiance, we're looking in the green. There's our April recovery. Let's see, 14.49 to 16, so that's price increase, and these are smaller price increases. Here's a $7 one, 70% return, so that's fine. Here's a return of 50%. Let's see what its dividend paid, 14 cents. Annual dividend, $7.32. You can see that's just under half. And 14 cents is average. It's got up into the 30s. And it's got down into the teens recently. And now it's low teens. So that one's trending down, but still hanging on. Is there any super high? Who's the highest? That one's the highest return. So it's $5.43 on a $7.86, 8 cents. So that's all just because it's a cheap stock, but paying a decent yield. And you can see it's been dropping. It's 21% lower than the 2-year average. So that is a negative. So I'm guessing we're going to see, 10.9876. So 8 to 10 is actually pretty close to its average. Interesting. Okay. And Granite shares, look at, this one is just absolutely collapsed. I don't know that there's going to be anything that saves this fund. $23,000 for the overall. Ugh. And we only have one that's barely treading water. Man, these are just losing. These are terrible. Who's the worst? 11 down to 9. I mean, they're paying good. I mean, look at this, 99%. So they're paying $9.97 a year, but the stock's down to $9.20, and that's on a 19-cent payment. So this whole group of funds, I'm not going to recommend anything on that. Not that you should take my advice on anything. If you do want advice, seek professional help, especially because I don't know where you're at in the country or what your tax rates are. Remember, if you're doing these weeklies, dividend tax is taxable income unless you're doing this in like a 401 or a Roth. So that's why I always recommend talking to a professional, making sure you're not going to get just absolutely destroyed on taxes. So that's the the weekly groups. And in the other video I did the monthlies, quarterlies. So I do want to say thank you for joining me today. If you would, again, like and subscribe. Take care of yourself, take care of your finances and your body, and we'll see you in the next video.